So, when we look at Oracle here, we're expecting some really solid results. This is a company that really benefiting from this, massive inflection on the compute side of things because of this AI revolution. So, we're looking for this quarter revenue of about 9% top line. This is a company that is going to see revenue accelerate here over the next 2 years. The company provided some really good guidance last quarter and visibility over the next 2 years, essentially looking for mid-teens growth next year. And again, their year end is the May quarter, so we're right on their year end. So mid-teens growth next year and into potentially 20% growth the following year. So we've got some really good visibility because of their Oracle Cloud infrastructure momentum right now.
Okay, you bring up growth. How concerned should investors be about Oracle's near-term revenue growth slowdown? I mean, is the market already pricing in a conservative guide, even elevated CapEx and ongoing supply constraints?
I mean, I think that's a fair point. Our view is supply constraints are starting to slowly ease and should really fully ease by the time you hit this August quarter. So I think some of those constraints that we've seen here over the last couple of months are already starting to ease, and that will help drive the acceleration on their Oracle cloud business. I mean, this is a business that has now essentially doubled over the last 2 years. Represents close to about 20% of their revenue. And what's really important here, right, is now that it's a bigger part of their business and will continue to grow at a similar growth pace over the next 2 years, it helps drive that better mix and upside potential to the broader revenue side.
What happens though? Could slower AI momentum, or even you brought up the cloud lingering OCL backlog conversion issues, weigh more heavily on sentiment than expected?
I mean, listen, this is a company that has had issues actually meeting consensus expectations over the last 6-7 quarters. I think they've actually missed 6 out of the last 7 quarters on the top line. The street has largely dismissed a lot of that stuff, even though you potentially see weakness on that given day. And a big reason for that is because of the visibility, the improved visibility you're seeing from that company. So yeah, I mean, you could potentially see headwinds in any given quarter, this quarter being one of them. But that said, we continue, as long as the orders continue to flow through, and we just saw a magnificent quarter, the last quarter in their February quarter results. Orders are outpacing revenue. That's, of course, going to drive the better visibility on revenue. And what's also important is that the revenue trajectory will outpace expense growth as well. And that's going to drive faster EPS growth as well relative to the revenue growth.
So what are you looking for in their commentary around Project Stargate and, what is it, 130 billion RPO backlog?
Yeah, so you got the 130 RPO backlog. I think they added about 48 billion last quarter. I don't think you're going to see the type of strength that you saw last quarter, and there's always going to be lumpiness on any given quarter. But we do still expect the RPO to grow here this quarter. I'd say as far as Stargate is concerned, last quarter, that 130 billion had zero tied to Stargate, right? So we want to see what they have to say, how they allocate, certain bookings to Stargate. We don't necessarily know how that's going to play itself out. But that said, I mean, that is a potential tailwind here over the next couple of quarters, is the fact that you are going to see new customer wins from Stargate, and that will add to their RPO strength.
We've already touched on this, but how realistic is the 25% cloud revenue growth target given infrastructure bottlenecks and hyperscaler competition?
I mean, again, I think it's one of those situations where, I think that they should be able to come close enough to it, if not surpass it. But again, there's always lumpiness in any given quarter, and there's always risk to a given quarter. I think when you look at the valuation of this company relative to other compute-oriented plays, and you look at the fact that they are such a small player in this market, right? And you look at that order strength that they've piled up here over the last couple of quarters. I think again, the visibility is so strong going into the next 6 to 8 quarters specifically that any type of disruption that you see in any given quarter should be used as a buying opportunity, because that momentum is going to be there for this company.
So how do you view the recent dividend hike and steady buybacks?
I think it's encouraging for investors, right? I mean, I think it, especially when you kind of look 2, 3 months ago, we were in the depths of a potential downturn or recession from a macro perspective, tariff uncertainty, and all that stuff. I think it was really important for that company, Oracle, to come out and announce that dividend. I think it gave further validation about what they're seeing in their business model here over the next couple of years. But yeah, I mean, when I think about Oracle, the only negative that I have with them is the fact that they have an enormous debt load on their side of things. They've made some acquisitions, which I'm not necessarily crazy about in the past. And when you look at what Larry Ellison is doing, at least today, I think this is probably the best move that he's made in the terms of seeing the opportunity on their cloud infrastructure side and really going all in on that side. Because I think it's really going to pay off here.
Okay, is Oracle's current 30x PE justified when you compare it to peers like Microsoft or Amazon?
I think it is when you look at the forward valuation. I mean, we have I think we have $185 target price based on about a 25 multiple next year's earnings. So we do think that when you look at the earnings trajectory, the earnings growth potential here over the next 2 to 3 years, and the visibility that this company has, not only tied to the Oracle Cloud Infrastructure side of things, but also the potential on their SaaS business, the potential to add AI agents across their platform there as well. I think there's really some great, exciting opportunities for this company. But that earnings visibility, I think, over the next couple of years is why we think the valuation makes sense here.
What happens if they have a miss this quarter? Does it shift the bull case materially?
I don't think it does. I mean, again, on the top line, they've missed periodically. I mean, it's been a history of theirs here over the last 2 years or so in terms of missing on the top line. So I think again the street realizes the real story here for Oracle and the long term visibility that they have. So I think any miss here or potential pullback in the shares because of a miss, I think again represents an opportunity for investors looking to have some exposure on the compute side. And not paying an egregious valuation. I mean, you look at maybe the only pure play compute name out there right now, CoreWeave, which we recently went public. You look at the valuation there. This is, I think, a good way to play the compute growth potential at an affordable price.
And this may seem like an offshoot, but I want to shift back to, despite the Elon Musk President Trump split, Doge. I mean, did that impact Oracle dramatically? The Doge cuts on government spending and their contracts?
That's a good question, and it'll be interesting to see if any of that pops up. I mean, nothing along those lines were even mentioned last quarter, last earnings season. My guess is there's nothing that's going to be big enough that would actually move the needle for this company. But yeah, I mean, listen, I think that those implications are and potential cuts on the federal side of things could potentially be a risk there. There's always you've also got the looming TikTok issue that's going out there as well, which also operates on Oracle's platform. So we need to kind of wait and see how that all plays itself out as well. But there's clearly risk tied to it as well. I just don't think it's anything that's going to be notable enough, given what they've got going on right now, across their pipeline.